We have quite a challenging metal price environment at the moment. Metal prices are actually quite low, not as low as they were back in the 2008 recession, but they are quite soft. And I think the key reason for this has to do with the questioning on the outlook for China and whether or not China is still going to be a key growth market for base metals and raw materials generally over the balance of the decade. And of course, that relates to the fact that China's industrial activity has slowed quite markedly this year, only up 5.6% year over year as of October. It doesn't sound low for people who live in the G7 countries, but for China, it is much lower than we have experienced for many years. And I do think, though, that China is going to remain a key growth market for metals and other raw materials over the balance of the decade. And one of the things that I look at in making that assessment is just the fact that the Chinese government, in their new 5-year plan, which they are just now rolling out, still has a GDP growth estimate and objective of about 6.5% to 7% GDP growth over the balance of the decade. That is higher than what many analysts would have expected. And the second thing is that as China shifts into more of a consumer spending-led economy, there are going to be a number of areas that are going to provide a good market for things like base metals. And one of them is obviously car ownership or passenger vehicle ownership. Right now, there are only 104 cars owned per 1,000 people in China. In the United States, by comparison, there are 803. So there's an awful lot of room to grow car sales in China. And of course, the Chinese, interestingly, prefer SUVs, just like we do in North America, sport utility vehicles. They're not so keen on small cars, but they just love SUVs, and they're going to be very metal intensive, using a lot of copper, aluminum, zinc in their manufacture. So I think over time, China still will be a great growth market for commodities, but we're probably going to have quite a challenging environment for metal prices near term over the next 18 months. I think right now for copper, we're going through a wave of new copper mine development around the world. In areas such as the DR Congo, in Zambia, the United States, Indonesia, but that is going to peak in 2017. And then I see supply-demand conditions for copper tightening later in the decade. And I think the price is likely to rise from today's $2.05 a pound on the London Metal Exchange, more towards the $3 mark to close the decade. Zinc is my favorite among the base metals, and I think supply-demand conditions around the world are moving rapidly into a deficit situation, both for refined metal and for concentrates. And we'll probably begin to see that in the second half of 2016 as inventories move lower and we start to see local price premium move up. And that will really be the trigger for market participants to bid up zinc prices again. I think that late decade, we're likely to see a revival. A lot of it will not come from a speed up in global economic conditions, but more because of supply side developments. And I see fairly tight supplies for many metals as we close the decade, and with that, better prices.